So what's going on with our Dow 20,000? Okay, the market dropped today. Okay, you can see the big drop we had. Let me put up the SPY for you. Oh, this is the SPY. Nice drop. Now we got what we call lower highs. And this is where I like to short. Pull back, right? She went sideways and then she dropped again. That gives us a perfect lower high. That's a wonderful place to short. The only problem is it's taking a little, you want to make sure that we get one more drop. Like this, see, there's the doji. This is engulfing it. I like to get one more drop like this through this guy right here, and that will push, that should push me over right here. See that? If that pushes through the 80% line, that'll be good. That'd be a nice short there. So hopefully we can take out this 25-day moving average right here, and we can get a nice short out of it, keep going down. And as I said, here's the real problem for the stock market. Okay, we have too many. We got so much stock buying going on. It's incredible. We got so much selling going on. Okay, it's incredible. We have right now $50 billion this year alone. 50 billion. Okay, and mutual exchange traded funds being sold. 50 billion. For the year, we've had a total of let's see, I think for the year it was over 700 billion, and that's a lot. Okay, and so what's happening is we got companies since this year here. I think we had something like 600 companies bought back. Now, it's when you start seeing mutual funds dump, our companies go to the Fed, they borrow money interest free, and they start buying all those stocks that they're dumping so to keep their stock price up. So, but we've reached the point now that this financial engineering of all this stock buyback is getting tiring here, because what we're starting to see more selling. We're starting to see more dumping of mutual funds. They're dumping faster than they can companies can go and buy them back or have money to buy them back. Now, why is that happening? Because remember, the mutual funds industry, the 401k industry, they had it made, for about 20 years, right up until 2008. The first baby boomers started to retire in 2008. So they had no clue how bad 401ks were. They're just a big scam, big fees. That's all they are. Where 1% fee wipes out 30% of your nest egg. The average fee is 2.5%. So if you have $1 million, you're going to lose more than you're not even going to have $500,000 left. That's how much they take from you in fees. Well, the baby boomers didn't know that. Matter of fact, they thought there was no fees at all. We had one survey, over 80% said, no, there's no fees in my 401k. So, but they had a free ride because nobody was suing, because we didn't have a lot of baby boomers until 2008. The first baby boomers retired. We go from 2008 up to 2016. Now they're catching on. They're going, what the hell kind of product is this? I didn't know this, that the fees were so bad, because now every day in the newspaper, like last week we had was it Starwood Hotels, they're being sued by their employees. Delta's being sued by their employees. Every day there's another company being sued. That wasn't happening before 2008. We didn't have any of that going on because we didn't have a lot of baby boomers retiring. Now that we got a slew of baby boomers retiring, and now they realize, they think, oh, I got $500,000 in my account. They go look, they got 175,000 in their account. They, wait a minute, where'd it go? Oh, I'm sorry, we had fees. We mean fees. I didn't know that there was fees. Yeah, you have fees. You got fees. And see, and they also didn't even know that during the day, $260 billion or $1 million, $260 million, $160 million are skimmed off every day in day trading commissions, and they hide them so they don't see it. So the market, I think what's going to happen is this. If the CEOs keep up with the stock buybacks, okay, Trump's going to have a real problem, because he's not going to be able to, he can try to grow the economy, but the big thing he's trying to say to the CEOs right now, look, I'm going to give you tax cuts. I'm going to get rid of all these regulations you have. I'm going to put all kinds of infrastructure in for you guys. I'm going to do everything I can for you. Okay, but you guys got to start taking your profits and plowing it back into your company, not buying stock. because to grow the economy from 1.6 to 4%, I need you CEOs taking your money and plowing it back in to buying equipment and everything. See, most people don't have a clue where when they hear GDP, they have no idea what that is. Never mind economic growth, okay? But the economy grows from every time a CEO invests money in his company in way of business spending. Because if we go buy a truck today, okay, if I have a company, I buy a truck, that means I have a multiple effect of 10. That means throughout the country, 10 people are working because I bought that truck. You see? So that's what grows the economy from 1.6 to 4%. But if they're on the other side and they're doing stock buybacks, to keep pumping the stock market up, so every time mutual funds dump 50 billion, okay, instead of it stock market coming down like it should be, it goes up. And that's been going up since 2009 right here. This was QE right here. But the big stock buyback, that's all QE in here. That's when they put in $3.3 trillion and bought stocks to push them up, starting with the bank stocks that went from here to here, 400% in about 4 weeks. But then from here, 2012 up to today, this is all stock buybacks. It's $6 trillion in stock buybacks. So every time mutual funds dump, if they dump 50 billion this year, well, guess what? No big deal. The companies go borrow $6 trillion, or this year, 500 billion, free, zero interest, and they buy their stock back. So the problem for Trump is, can he get the companies, the CEOs, to agree to stop doing that, put their money in the company so we can grow the economy from 1.6 to 4, so everybody benefits, the whole economy benefits. Right now, this profit without prosperity is killing our economy, because it's killing our companies, it's killing our wages, it's killing our economic growth. It's just plain killing us, while we have 1 percentile making a fortune, okay, on the stock buybacks. So that's the problem. Now, for us as traders, we don't care. I think what's going to happen is, I think the market's going to drop. I really believe the market's going to drop back down right here to this level here. Okay, this is where Trump rally started, right here. I think we're going to be in a range from here to here for a while. Okay, I think she's going to start breaking, and we're going to be in this range right here. I really want to get down to this range, which is about 30%, but I don't think that's going to happen. Okay, now I think, and for this not to get down here, Trump's going to have to repeal what's called the 10b-18 rule, and that's where they took an illegal practice of manipulating stock prices and made it legal. He's got to cut that back. He's got to get rid of that. We got two things he's got to repeal. This is more important than Obamacare, because this hurts the economy even more than Obamacare. Obamacare does, certainly, because we lose all kinds of full-time jobs to part-time jobs because of Obamacare. But this is destroying our companies from within. It's destroying. I mean, we had a growth of 2010 to 2012. I forgot what it was like. We had like, just give you an example, like we had like 16 million new people. Okay, the population grew by 16 million, but we only had 13 million jobs, and the 13 million jobs we provided were all terrible jobs. So this 20,000, it's a joke. We don't care. If they decide to do more stock buybacks and she starts breaking out and running like this, okay, right up to the inauguration, fine. If she breaks and starts breaking down to here, which I think is going to happen between now and the inauguration, down to this area right here, that's fine too, because we followed the money. So that's where it stands. So that's why, if you're not a gang member, I would suggest join a gang so that you can participate, okay, in this exciting rally. And we got nice volatility. So, and especially your MV2, this is a perfect tool. When it turns red, it tells you to get out. There's nothing better. When you have a stock that's going up and you're right and it's green, isn't it nice to know when to get out? That's what it's all about. Here's the S&P right here. Here's where the Trump rally began, and it told us to get out right here. Now people are getting out today. Well, wait a minute. We got out earlier. Okay, so check it out. See you on the charts.